Hello, chart watchers and Decision Point faithful. Welcome to this July 30th, 2020 Decision Point show with your hosts, Carl and Erin Swenlin. For those of you joining us for the first time today, we want to welcome you to the show, and we do hope that you will be back next week. All right, so welcome, Dad. How's everything going on up the hill there?
Really wonderful.
Yes,
Great.
wonderful, beautiful day. So far, it was a good day in the market, so that always makes us feel a little good. This is being recorded, by the way, on Wednesday evening, so that you're familiar. All right, well, let's look at what we're going to talk about. I wanted to discuss a little bit about the broad markets and how we're seeing this uneven participation. It's something that's been out there for a while, so I don't think this is totally new to anybody. But I thought looking at a chart with everybody on the same chart, I thought it was pretty interesting. I wanted to share. We have some negative divergences out there that you should be aware of that could be a problem. You know, so far they haven't really played out just yet, but there's something to keep in mind. We have the gold rush. Gold is having an amazing time. Carl wrote an article, a free article on, was it Monday, I think, or Tuesday?
Yeah, that was Monday or Tuesday.
Yeah, we write so many, it gets a little confusing, but he wrote a really great article. It is a free article, so I would direct you to our website. I'll show you how to get there to get to that free article. Also, we're going to talk about nat gas. It's been an interesting place right now in the market. Carl and I both have positions, full disclosure, but I wanted to talk a little bit about why I have a position in it, and you can take that for what you'd like. Real estate is starting to perk up. We had a nice breakout in that sector, and Carl and I talked about it this morning when we met for our little company meeting, so we'll give you our insight on real estate, and then of course we're going to finish up with our diamond of the week, and I'll give you a hint that it is from the real estate sector. All right, so let's go ahead and get started here. I do want to let everybody know that we are still running a one-week trial of the DecisionPoint.com reports. We welcome you to come try out our reports. All you have to do is subscribe to that bundle package and use the coupon code DP trial, and you will get your first week. You'll get a free week to try out, and then it will renew after that 1 week. But if you cancel before that, or you let me know at any time, I will set you up and make sure that you don't get charged if you're not interested. So do give us a try, and I do want to just hint that we will be raising prices in August. So you probably, if you've thought about doing DecisionPoint.com reports, this would be the time, because you'll be able to lock in those low rates, and you'll be forever at these lovely rates that are really, really low. So we hope that you come and check us out. All right, so let's look at our Decision Point scoreboards. We did have some changes this week. The first, I didn't outline it because it did come in on the day of our last show, but we did get a PMO sell signal on the NASDAQ 100, and then that was followed on Friday by the S&P 100 and the Dow getting the same PMO sell signals, and then the S&P 500 joined in on Monday. So we are seeing some momentum issues. Of course, looking at the last 2 days of price rises, that might not feel that way, but the momentum has shifted lower. All right, looking at the sector scoreboard, we keep track of our intermediate term trend model and our long-term trend model signals. These are silver crosses, 20, 50-day EMA positive crossovers. That's what gives you that buy signal. Long-term trend model, those buy signals are based on 50 and 200-day EMA crossovers, or a golden cross is what gives you a buy signal. So right now, as you can see, the only sector that's still showing a 20-day EMA below the 50 would be XLE, the energy sector. It's still really beat down. I did write in Chart Watchers about this sector. I did put in a few of the stocks that I liked in this sector, and they might still be a good place to consider just because we are so beat down here on energy, but you just have to be aware that just because the price is at the bottom of the chart, it doesn't mean that that's support. So you just have to be aware of that. But let's go look at some charts. All righty. So I want to start off with, let's go into, I had it all set up and now it's not there. Let's go here. So I'm going to look at our broad market indexes first, as I said. All right, so as you can see, I mean, we had a really nice day, almost 1.25% to the upside. But what I was noting on this chart, and of course, we've got all of these major indexes on it that we follow, and we know that the SPY is about, with 3.5% away currently from its all-time highs. But I wanted to make note of the fact that you've got the S&P 400, there, it's still 11% away from all-time highs. The S&P 600, which did start to show a little bit of promise, is still 18.5, 19% away from its all-time high. And noting the Dow Jones is similar, two-digit, and then the NYSE as well is 12% right now, the current price below its all-time highs. Yet, as Tom Bowley talks about a bifurcated market, it is bifurcated. We've got technology really went on a run. It's pulled back somewhat, but it is still about 7.5% higher than its previous all-time high. So there's a lot of work that needs to get done. And I know, Dad, that we were talking a little bit about, it's interesting that we have the Facebook, Google, the congressional hearings going on today with those big names and that's sort of thing. But, they're the ones that seem to be carrying a lot of this. And I think that that looking at the NASDAQ and even the S&P 500, that's really where we're seeing a lot of the moves.
Yeah, I've got something on this in the Evergreen GavCal blog. They had an item there talking about the S&P 10 versus the S&P 490. Basically, there are 10 stocks. I'm pretty sure these are the largest cap stocks within the S&P 500. And that's the usual suspects: Amazon, Google, Apple, Facebook, Visa, MasterCard, NVIDIA, Netflix, and Adobe. And those stocks as a group are up from the first of the year. They're up 35%, whereas the S&P 490, which is everything else in the S&P, is down 10%. So this is a wacky, as you say, bifurcated. It's not a healthy situation. I don't know when it will come home to roost, but it's not a healthy.
Yeah. And I have to wonder, I know we talked about it previously about, gosh, now I'm going to lose my train of thought because that's just how it happens. But I know that we were talking about the fact that they were leading, that these are the places that we're seeing. But we talked about the indexing on ETFs. And, I was thinking about it after we talked, and, Apple, all of these stocks, they're not just in those S&P 500 ETFs. They're in a lot of them, and that could affect why they're, finding so much strength. I don't know.
That's a big part of it, because sure, they're going to show up in every technology mutual fund. Just go on and on. Whereas the rest of the S&P 500 won't be. I mean, they're going to be covered a lot of places too, especially the index funds of the S&P 500, but they're not going to be as covered as widely as the S&P 10.
Right. So I think there's a little bit of all of this going in, and it isn't going to be, it isn't healthy for the market at this point. But, we have to go with what we're looking at now, and, we're seeing some rally going on here. I'm just going to pull up, no, not that one. I'm going to pull up the chart of the S&P here. And you can see we've been on a nice short-term run after that big decline back down to the 20-day EMA, still making that move upward. But, you know, some of the things that I've noticed were these negative divergences, and I know you've written about some of them as well. So let me go to the first one, is the PMO crossover buy signals. So this is where we track the percent of the S&P 500 that have PMOs above their signal lines, and that's 60%, which is you know, a neutral-ish number. But what I noticed is that, you know, we had that big move up here that kind of was an initiation, if you will, to get us to continue higher. But then our next low was lower, and that predated this particular decline, if you will. And now we're seeing an even deeper negative divergence as it continues down, and we get another top here well below the previous top. It's another indication of that not everybody participating within that S&P 500 index. So that was one of the negative divergences that's really bothering me right now. And the other one is on our Swenlin trading oscillators. And I want to add a zoom thumbnail here just so you can see it a little better for your screen. So the thumbnail is instructive here. Obviously, you can see we've had this decline and prices were moving up. Right here, we had, if you look right at that top and you come down, we had a little bit of we had some confirmation. But the problem is now we've come out of that low and we've gained quite a bit. And yet what's going on with these Swenlin trading oscillators? We're now after a 1.25% move to the upside today. These indicators went negative. We already had seen negative numbers coming in on our volume indicators. So there was already an issue with volume, although we had a discussion that maybe volume was lower based on, you know, we were waiting on the Fed, and that could have affected things somewhat. But notice percent of stocks above their 20, percent of stocks with PMOs rising. All of these are trending lower. And
They popped up today, though, those two bottom ones.
Yeah, they did pop,
Yeah.
but we're still.
Yeah, it's still, it's a divergence.
Yes.
Yeah.
Absolutely. But seeing these red bars on an upside move like we're seeing from that low is a bit concerning.
You know, one of the ways of looking at that is this is internal correction taking place that is not going to affect price. I mean, that's the possibility. I tend to not think that way because I don't, you know, I'm not a real positive thinker with them like this, but it is something to consider.
Right. The oscillators must oscillate theory.
Right.
And what we mean is you know, you have with these, you've got a 0 to 100. You've got a fixed range, whereas with these oscillators, you don't. But if they get too far out of whack, they have to correct themselves. And so sometimes you will see those dips while, so it has to oscillate, and it's gotten too high. So then it'll head down. So you have to be aware of that. Right now, I mean, I like the fact we're still seeing a lot of green on these charts, though. I think that's still really an indication of the fact that the market does have this bullish bias still in play. I mean, it's holding this rising trend line. It's, you know, we're seeing some good market action right now. I just would like to see it backed up by some of these indicators. It's kind
of,
it
is a rising wedge up there.
Yes. And actually, I think if we look at that 5-month candle real quick, there we go. It really points out this wedge that we're looking at. And, you know, rising wedges, the expectation is a move to the downside. Back of the napkin, I've seen you could calculate the length of the back of that, and that could give you a minimum downside target, something I've learned in my exploits. But so we could be looking at a big deep decline that could take us back down, you know, close to where we were here at 270. I personally am not going to subscribe to that because the bullish bias in this market is just too strong, in my opinion. And I think one of the other ways you can look at bias, we invert the VIX and we put it on a log scale just so you can really see the moves better. And what we can pay attention to is where the VIX is in relation to its moving average. And I've talked about this quite a bit, but when you see most of those readings above the moving average on the inverted scale, that typically is telling you that there is some internal strength going on. So I think it just speaks again to the bullish bias that's out there. But I'm not saying that we're just going to keep going up and that we won't get a resolution to this pattern. I don't subscribe to that. I just don't know that we'll get a hugely deep decline yet, just because we're seeing that this bullish bias, this internal strength still within. All right, next up, did you want to go into gold?
Sure.
Let's do that. Before you take the screen real quick, I'm going to take everybody to the homepage for DecisionPoint. And even if you're not a paying member, you can go over to the blogs and links, and we do have free articles peppered in here. And this is what Carl is going to be talking about.
Okie doke. One of the things I wanted to cover just before I do gold is Eastman Kodak, an old member of the Dow 30. It's been dead for years. Suddenly they've got an agreement with the government, and they got money that they're going to be providing, the way I understand it, chemicals for the drugs that the drug companies make. So I don't fully understand it, but they got this sudden interest, and today it was up 2,300% at the high, and it closed, it was only up 1,700%. I just thought that was an interesting thing from an old.
I don't think I've ever seen a move that.
They're out there, but yeah, it's not very often.
Yeah, penny stocks.
And certainly not in any stock you'll ever own, right?
I hope that I do one day.
Well, yeah, don't we all? But
Yeah.
like we would, yeah. Okay. Let me. I'm trying to think where to start. Let's just go. Gold is suddenly taking off, and it basically exceeded the 2011 all-time high. So we're in all-time high territory. We need to be about 1982 to have a decisive break above this line. But you can see it's how we've gradually increasing the angle of ascent on these rising trend lines. And we're also overbought in the daily. But the thing that does give me some reassurance that we're not at the end of this move is that the sentiment is still not bullish. I mean, you can. We'll look at some longer charts, but you can see during this period it started getting bullish, and then it just kind of went down again. So this is what the public. This shows the premium or discount on the physical gold fund, Sprott Physical Gold. So, and the public is just not interested yet, believe it or not.
Technicians are, for sure. And you did mention that in the article, that there seems to be a large consensus of opinion right now among analysts, which...
Yeah, I was going to forget that, wasn't I? Yeah. I watch these people on the business shows, and they're always bullish about the market, but rarely on gold. And now just everybody I see thinks you should have gold in your portfolio.
Yeah, besides those commercial guys that come on the commercials.
Well, no, I'm talking about the...
yeah, just the regular...
Yeah, the common people, they that they have on as guests.
Yes.
So here again, we have, this is the weekly chart. Here's the bear market low, and it's only gone up almost 90% from the bear market low, and the public is still not interested.
It's crazy. And you know, you can look at those really high discount levels and they usually precede more upside.
Right. I really don't like to be in something. I mean, I love to be in something that's going vertical, but then again, I don't like being in it because it's, okay, I might have to try to bail quickly, as these things often end in tears.
Right.
But the fact that the sentiment is still, the public is not caught on yet. I think we're going to survive this. If you look at, this is not quite as vertical, but you see, we get these up moves, vertical up moves, and it consolidates. Same over here, up, straight up, and then a consolidation. So I'm thinking that is the possible outcome. Every parabolic doesn't collapse.
Right. And I have to say, I mean, I do, full disclosure, own GLD. And what I've done with a lot of my positions right now is set, I don't normally use a trailing stop. But when I start to feel a little bit nervous for any reason, I want to still keep, you know, getting those gains. But by setting that trailing stop, if you get one of those flash crash type movements, you will be somewhat protected.
Right. Okay, and on the monthly chart, you can see this angle right here is pretty much matches this angle here. So that's a nice steady up move. Then you go vertical, and then you're in trouble. So it had a rather sharp down move, but at least it did consolidate for a while before it continued down. And again, I'm hoping, believing that that's probably what's going to happen this time, is some consolidation rather than a crash. Because, as I say, the public hasn't caught on yet.
Mm-hmm.
Also, we got a correlation with the U.S. dollar. Notice that with the dollar going down, the fact that we're no longer correlated is a good thing.
Mm-hmm.
The dollar going down is reinforcing this up move.
Yeah, and the dollar still looks pretty sickly. But you can read more about that in the Decision Point Alert, because we talk about the dollar, gold, oil, and bonds every single market day, so in our report. All right, so where were we going to go next? Hi. Do you have something?
Well, I've got it. Let me just,
Yeah.
technology. Notice we had a rising trend channel, broke down in that, and is trying to edge its way back up into the channel. But that was a rising wedge that formed. This rally here did not make it all the way to the top. When you see that, that's kind of, get worried about, it's going to break down some.
Mm-hmm.
Plenty of negative divergences here. Technology is just out of whack. Sorry.
Yeah, it's not been the darling really this month that we've been experiencing previously.
Okay, I guess you can have it back.
All right, well, let's go ahead and look at natural gas. So I wrote an article in Chart Watchers. Let's go right here. And you'll find that on StockCharts.com. And I wrote about the energy sector beginning to show some promise. And so I looked at oil, and we finally have gotten, actually, I think if I click on this, the momentum has finally shifted. No, it hasn't shifted quite upward. But we're seeing breakouts here above the 200-day EMA and support here at the 20. So it seemed to me that, at this point, it might be the time to start looking for some possible moves in the energy sector. You have a reverse head and shoulders, at least that's what it looked like on Friday. And I'd say that that's still intact. And you can see some improvement on some of these numbers. I'm still not, I'm not a huge fan of the energy sector, but if I am a fan of natural gas right now. And, we had talked about this chart. I'm going to make it big so everybody can see it a little bit better here. There we go. And, one of the things, you were the one who kind of came to me and said, hey, just so you know, I'm looking at getting into natural gas. And he forwarded me this chart. And there were a lot of good things to look at on this chart. Let me see if I can get it with some annotations now again. Oh, come on now. There it is. Okay. All right, so this is not an up-to-date chart at the moment, but this is where it was when we had our discussion. And there are a lot of good things going on here on this chart. And one of them would be this double bottom coming in after a really lengthy decline. We tested, that was a new all-time low, I'm pretty sure, for natural gas. And then we made a higher low. Form this double bottom. It's forming, I should say, because it isn't official until it breaks above this confirmation line. When it does that, the expectation should be a move about the length of the double bottom. I went with the conservative side here with the 950 to like around 1150, and I calculated up that we should at least see a move if this pattern comes together. The expectation should be a move that could be right up here at about $13, and that from the price at that time was a 22.5% gain. But let's look at it now. And when I wrote that, it was back, let's see, we've had Monday, so I wrote it back here, and of course we bought it, and what happened, Dad? The next day, pretty much it dumped. But the chart was still very bullish. You really didn't see much in the way of deterioration on this chart. I brought an updated chart to my diamond readers when I saw it, when it had gone down, because I wanted to let everybody know on my diamond reports, look, I got into this. We had this big decline. Now is a good entry point. You're getting a benefit I didn't have. So I wrote about it on Friday. And then on Monday, I updated my chart for my diamond subscribers. So since then, let's see, from that close on Monday up to, well, the top today, that's an 8.5% gain. And like I said, I don't see any reason why we couldn't complete this and go up to that $13 level, about the length, like I said, of this double bottom, bring us right about here, or right there where you've got that overhead resistance. In any case, that's 15 to 22%. So you got to like it. I think there's still a lot of upside potential on this one. So I wanted to talk about that. And we're getting to the end of the show. So let me get to my diamond of the week, but I'm going to look at the XLRE chart very quickly here. And then we'll look at the diamond. There we go. And both of us were talking about this morning, about that really nice breakout. We've had a long-term consolidation here. Well, longer term. If you're looking at a daily chart, that's long. And we're now hitting that overhead resistance, but today it popped above it. I think real estate's looking pretty good. You can see the buy signal. So very quickly, here is my diamond of the week, and that would be Lexington Corp Properties Trust. I did this diamond yesterday, and today it had a almost 2.5% move to the upside. But as you can see, I think the chart still has a lot of positive energy going on it. You know, we've got the PMO is still rising. Yes, it looks overbought, but look at where we've been on the low side. That's all we got for you today on Decision Point. Hope you enjoyed the show, and happy trading.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.